If you've never invested a single dollar in your life, this video is about to change that, because I'm going to show you the exact roadmap from zero to your first investment to a portfolio worth hundreds of thousands of dollars, and it starts with just $100. Now, I already know what's going through your head right now. $100 is nothing. That's not going to make me rich. And that thought, right there, is exactly what's been keeping money out of your hands. The people building real wealth today didn't start with more money than you. They started with something you're about to have, the right knowledge. In this video, I'm breaking down what investing actually is, what to buy, how to read it, and the exact math that turns $100 a month into over $1 million. No jargon, no confusion, just plain English. Let's go. Let me tell you what usually happens. Someone watches a video like this, gets genuinely fired up, downloads Robinhood at 11 p.m., throws $300 into some stock their coworker wouldn't stop talking about. 2 weeks later, that stock is down 40%. They panic, they sell, they lose money, and they tell themselves, I knew investing wasn't for me. But here's the truth that nobody actually told them. They didn't fail at investing. They just skipped the order. And the order is everything. So before you touch a single dollar, here's exactly what you do. First, before anything else, you build your emergency fund. 3 to 6 months of living expenses, rent, food, bills, sitting in a savings account, untouched. This isn't exciting, I know. But here's why it actually matters. Investing only works when you can leave your money alone. The second you need that money back, you're forced to sell. And forced selling almost always means selling at a loss. Your emergency fund is what buys you patience. And patience in investing is everything. Once that's done, you open a brokerage account, not a crypto app, not some trading platform your friend texted you about. A real, boring, reliable brokerage. Fidelity or Charles Schwab, both free. Both beginner-friendly, both trusted by millions of Americans. That's where your investments live. Then, you start with index funds or ETFs, not individual stocks, not options, not crypto. We'll get into exactly what those are in a second, but the point is, you start simple and you start broad. Then you automate. You pick an amount, $100, $200, whatever you can, and you set it to move automatically every single month. No thinking, no timing. No waiting, because here's the thing about time in the market. Nobody can do it. Not the hedge funds, not the Wall Street analysts, not the guy on Twitter with 400,000 followers. The only strategy that actually works is time in the market. Consistent, automatic, every month. And finally, when the market drops, you do nothing. You sit on your hands. You close the app. You go touch grass. Because a market dip is not a disaster. It's a discount. The people who built generational wealth didn't panic when the market fell. They stayed calm, and they kept going. 5 steps, that's all this is. But now comes the part most beginners completely skip. Understanding what they're actually buying. And once you hear these explanations, you're going to wonder why nobody ever said it this simply before. Okay? So now you know the steps. But here's where most beginners just hit a wall. They open their brokerage account. They're ready. They're actually excited for once. And then they see it, ETF, index fund, dividend, asset allocation, expense ratio, and they just close the app. And honestly, I don't blame them, not even a little, because nobody ever sat down and explained this stuff like a normal human being. So that's exactly what I'm about to do. Let's start with the big one. What even is a stock? A stock is just owning a tiny piece of a real company. Like, when you buy 1 share of Apple, you literally become a part owner of Apple. A very, very small part owner, but still an owner. When Apple grows, when they sell more iPhones, when their profits go up, your tiny piece, it becomes worth more. You didn't do anything extra. You didn't work harder. You didn't stay late. You just owned a piece of something that grew. That's a stock. Okay, so what's an ETF? All right, picture this. You walk into a fruit store. You could grab just 1 apple, or you could grab a fruit basket. One that already has apples, oranges, mangoes, grapes, everything. Already packed in there for you. An ETF is that fruit basket. Instead of buying one company's stock and just hoping, praying that one company does well, an ETF lets you buy a basket of hundreds of companies in one single move. One goes down, doesn't matter. The others hold it up. Less risk. Automatic diversity. One move. Now, what's an index fund? An index fund is basically an ETF, but instead of tracking some specific group of companies that somebody handpicked, it tracks the entire market. The most famous one? The S&P 500 Index Fund. The S&P 500 is literally just the 500 biggest companies in America. Apple, Microsoft, Amazon, Google, all of them, sitting in one single fund. When you invest in an S&P 500 Index Fund, and you're not betting on one company anymore. You're betting that America's biggest businesses, as a whole, will be worth more 10 years from now than they are today. And historically, they always have been. Every single time the market has crashed in history, it has recovered and gone higher. That's not optimism. That's just the record. Now here's the one that makes everything click. Compound interest. This is the most powerful force in all of investing, and I don't just want you to hear this. I need you to actually feel it. Imagine a snowball sitting at the very top of a hill. You give it one push, and as it rolls down, it picks up more snow. And the bigger it gets, the more snow it picks up, and the faster it grows. That's compound interest. You earn returns on your money, then you earn returns on those returns, then returns on those returns. It just keeps multiplying on itself forever. Einstein reportedly called it the eighth wonder of the world, and he said, "The person who understands it earns it. The person who doesn't pays it." Let that sink in.